You just had to be the odd man out, right?
Money talk.
What's going on, everyone? Once again, this is another episode of Money Talk. And today I have a couple of my recurring guests. We have Dream for Greatness, Steven, and we have my cousin Josh over here to provide some more financial education, literacy, entrepreneurship, and investing. And today our topic that we're going to discuss is budgeting. And also with budgeting, we want to touch on the topic of how if you budget correctly, you can have more money available for you to invest into different type of investing mediums, and we'll touch base on them. So from the top, Steven, you want to provide a little bit of information about how you go about your daily activities when it comes to budgeting?
Yeah, for sure. Not a problem. One thing I like to do, man, I run my personal finances and my budget similar like I would like a profit and loss statement on a business. You have to treat yourself like a business. Like you have to understand how much money is coming in and how much your expenses are that's going out. You have to be able to track that because, especially if you have goals that you're reaching for, whatever the case is, you have, minor expenses that you may not track or you let go by the wayside that'll kind of, add up in the end. It's like those little minor transactions, those little minor expenses that really add up. So for me personally, like what I like to do, my income every month, I like to track it monthly. I think like starting off, you could do weekly, but I think like it's a little bit excessive. I like to do monthly, just to see how much I have coming in, and then just tracking my bills and seeing how much I have left over to be able to put towards my investments. And ideally, I like to like live off of like 10% of my income, as far as like entertainment, going out and stuff like that. So whatever is going towards expenses, typically about 50% going towards like my bills and stuff like that, and then I use about 20% to put towards my, I use about 30% to put towards my investments like stock portfolio. Paying down property, whatever the case may be. And then the rest I like to put towards like entertainment. If I want to go out, if I want to have a bite to eat, it's like my reward at the end of the month or something like that. So that's for me, that's how I structure my budgeting. And always make sure to, again, in that all the way down to like the minor details, like even like my gym membership, factoring that in with my costs and stuff like that, because all the stuff adds up after a while. So yeah, I usually track it on a monthly basis, and then I structure my investments or what I want to do for the end of the month based off of how much my expenses are. Because of course, you have like unexpected, you might have something wrong with the car, whatever the case may be. So, I usually do about on a monthly basis, and then whatever I have left over, that's what I base my investments off of.
Okay. And just to add on to that, I see at the tail end you mentioned for unexpected expenses. In regards to that, do you have a particular account where you put something on that end as far as like emergency savings, or is it anything in particular, or you just regularly monthly put a couple of funds into that account and just go about your ways, taking it out whenever necessary?
Yeah, so that's a good question. So I just put it in my savings account. Honestly, there's other options you could do. Like I would definitely recommend like a high yield savings account for your emergency fund if you're not going to be using it, if you're not going to be touching it, if it's just like your nest egg. But typically I'll just put it in my savings. As long as it's not in my checking account, I put it away. I know I have something that I'm not looking at it. It's just, it's tucked away. It's not something that I'm not tempted to spend it. And I have it there just if I need to utilize it in the future. So yeah, typically for me, like I'll just put it in my savings account. But again, definitely look into high yield savings account. That way you can get a return on the money that's just going to be sitting anyways, as opposed to getting your 0.001% that's going to be sitting in your savings account. But yeah, typically I just tuck it away as long as it's not in my checking account. Then yeah, that's what I typically do.
And seeing as this is a platform where we explain financial literacy, can you just briefly summarize for those that don't know what a high yield savings account is?
Yeah, for sure. So a high yield savings account, typically like it's a product that a bank will offer. And again, it's a fund that's managed by the bank itself, and they will typically provide you like a certain return. It's not much. It's like pretty much just hedges. Like it basically just goes along with inflation. They'll invest that money into different, like the money market. Money markets are invested into the stock market. Bank makes their own investments and provides you a little bit of a return. Just be careful with a high yield savings account because you are subject to penalties. Or taxes at the end of the year on your gains. So definitely just be wary on how often you're going to be actually needing that money. If it's something that's tucked away, and it's, you're not going to be touching it for another year or 2 years or something like that, definitely look into it. But if it's something that you need on a regular basis, I wouldn't keep it in a high yield savings account just because you want to be subject to the penalties and the taxes that will come with that.
Okay. All right. I appreciate you sharing that, Stephen. And just for me to add on to that, as far as how I go about my expenses, the first things first, for those that don't have a set budget or even just a general idea of where their money is going, it's always good that you have, even if it's not a necessarily detailed spreadsheet or Excel format of what your expenditures are. You want to get an idea of where your money's going as far as in and out. And I chose to expand on this topic because previously on another Money Talk episode where I was talking with Rashawn about living below your means, it pretty much goes hand in hand. If you're living within or below your means, you want to make sure that you have an idea of what you're budgeting and how your money is being dispersed, and the income as well as the outcome, how it's going on a daily basis. And for me personally, the first thing I want to get out the way when I'm creating a budget is knowing the idea of what all of my expenses are. So pretty much for most people, the biggest thing I feel, in my perspective, my opinion, I feel like the biggest thing is for you to handle expenses first things first. Because if you don't handle your essential expenses, at that point you're at a deficit. You don't want to go into collections. You don't want to cease control of any of your daily utilities. You want a roof over your head, and you need transportation, depending on where you are, depending on where you're living. You need active transportation, so you're paying for that as well. And so once you handle your expenses, the leftover money from your expenses, which we all know income minus expenses, and that's the leftover money, is from there, what are you going to do with it? And typically what I would do is either put it into some investment, particularly stock investments. And from then, you'd want to decide what are you going to do with the rest of your money. It's cool to save, but you have to save with an idea of what are you saving for. So with that being said,
that's like having a goal in mind too. That's kind of like your motivation right there, why you would like cut certain things. And oftentimes too, you really gotta you have to be able to manage whatever it is that you currently have at the moment. Because if you can't manage, the $2,000, $3,000 that you're making every month, or $1,500, you have to be able to manage 10 grand a month. So you have to start with where you're at currently. You have to be able to understand and be able to manage what you currently have and be able to work towards it and use it as like a stepping stone. So as you continue to accumulate more money, you're not like, all right, typically people, as your income goes up, typically if you don't have the mindset of knowing how to properly budget your money, or wanting to invest, you're going to automatically want to spend more because you have more readily accessible for you. And you got more coming in next month. So definitely you have to be able to manage it where you currently are right now. It don't matter if you're making $1,000, $1,500, track everything of where it's going. And oftentimes too, like it may not be, you can only cut out so much before you have to start looking to other streams of income. So there's only so much that you can budget to try to work towards it. Eventually you're gonna have to find another stream of income to kind of expedite the process to be able to accomplish and get to where it is that whatever your next step in life is. If that makes sense.
All right. So with that being said, Josh, we just discussed, Stephen discussed his budgeting process, and I discussed briefly mine. So how do you go about dealing with your expenses and making a budget?
I make sure that I pay myself first. Just like Stephen said, treat yourself like a business. Pay yourself first. And then after that, I make sure to take care of all my expenses, whether it's my car insurance, phone bill, rent, or some other bill. I take care of those. And after that, I pay myself again. And whatever is left over, I pay myself with. Usually that's what goes into my investing account. And then hopefully by the beginning of the next week, I've somehow either bought more stock with it, or somehow it's getting some type of interest on it. So, always find some way to make the money work for me. And what I wanted to say too is just try to live frugal as can be. Don't keep up with the Joneses. The Joneses, don't want that. Just because somebody else has this or that, you don't need this or that. So just worry about yourself. If you have a goal in mind, what you want to reach, how much money you want to save every week or every month or for the year, try to reach that goal. some people they have like their IRAs, their Roth IRAs. They're like, you know what? I know if I could put $5,500, $6,000 in this for the year. If that's all you want to save for the year, so be it. Make sure that you hit that goal. If you want to put away $100 every week, and at the end of the week, at the end of the month, you go ahead and you invest that, you do that. But always make sure you pay yourself first, pay off your debts. You don't want to owe anybody money. That's the worst thing you want to do. And then pay yourself again. So that's my process. And just live frugal. You know, if you think about, I'm gonna drive out, I'm gonna go get this, I'm gonna go get a burger. Like, you're not thinking about the other costs that come to getting this burger. Now you gotta the gas, your time, the drive back, and it's just not worth it. Find something in your pantry, fry an egg. I'm sure you might got some bread, and just have a meal. It may not be the best meal or what you're craving in that moment, but it's definitely worth the $20 that you're ultimately spending. And I think just from investing, like I find myself now literally, some people call it penny pinching, like literally assessing every cost, like down to every penny that I possibly can. Be like, am I really gonna get the satisfaction after I eat this meal? Sometimes you do, sometimes you don't though. So it all depends. So yeah, that's my business with buddy.
Definitely not a bad thing to treat yourself.
Exactly. You gotta treat yourself every now and then. Definitely. So, not saying just don't ever just eat sardines every night, but yeah.
Yeah, for sure.
Bro, like when you talk about keeping up with the Joneses, man, I think that's crucial, bro. Because like a lot of people, they'll base their income or like they'll base their expenses off of like what other people are doing. So it's like somebody got a nice car, brand new car, something like that. They feel obligated. That's an accomplishment for them to want to go out and get it, not realizing they could have put that towards getting their first investment property or something like that. So yeah, but I definitely agree with that, man. Keeping up with the Joneses, man. Just stay in your own lane, focus on yourself, keep your expenses as minimal as possible. Just keep it pushing. You'll eventually get there. Nobody's gonna remember what you drive in your 20s. Nobody gives a damn either. So just focus on you. Put it to work.
As long as you got some type of transportation, you're good. Don't
That's it. Get where you're going.
Exactly.
Yeah, Josh. So I hear you talking about how you can pay yourself. You end up paying yourself. You said to make sure you're paying yourself first things first. So with the available money that you have after you've spent your money on your essentials, your expenses, or saved, as far as investments, what are some forms of investments you or anybody else that has money available can get into with the available money?
I mean, me personally, I just do stocks. I don't do any like, I know we want to segue into like the index funds and the ETFs, but I just do stocks. So that's what I put it into. I just put it right back into my account, and I just trade off of that. But some people, if you want to just throw it away into a index fund, that's one way to do it. But I do stocks. I pick threes, fours.
Okay. And do you want to?
Bro, any like anything in particular?
What's up?
Any like stocks in particular that you normally invest in regular?
I'm doing like the big tech.
Same way.
But lately I've been really into Bank of America. That's like, I try to at least do $100 if every 2 days or every 3 days. I do at least $100 a week with Bank of America, and it's really because that's also what we should touch on too with budgeting. People, they should step away from your general savings accounts. I don't know if they've been keeping up with the Fed. The Fed, they're keeping rates at all-time lows. So the banks are not giving you no interest on your money. You're making, due to inflation, you're probably losing more so 3%, 2 to 3% on your money than actually gaining 2 to 3%. But if you look at some of these bank stocks, they have dividend yields of 2.5%, 3.5% higher. So for every share, I think it's like every share you own, you get a dividend on it. So that could be, I think Bank of America is actually 18 cents. I can't do the math that quickly, but if you have like 10 shares, that's $1.80, and like That's more than what you're making on keeping the money in your savings account. So get savings accounts out of your mind when you budget. Like, it's nice to have, but also like you're better off just having it in a bank stock than in the bank. So
the best part about stocks too is liquid, so it's like you can pull it out whenever.
Exactly.
You face a tax penalty, but who cares? That the profits that you already made anyways, you don't have to do anything for it, so you might as well take advantage of it. You only take it out for an emergency anyways. Just tuck it away and don't even look at it.
Exactly.
Yeah, bro, I definitely agree. Absolutely, let your money work for you, not the other way.
Yeah, get away from the savings account. Like, years ago they were good, but now you lose your money keeping it. I actually have a savings account, and it's just literally to keep the account open. So if I don't have the money in the savings account, they charge me a certain amount. So I'm like, no, I just keep it at this. It's like I don't use it. It's literally like losing money. Like, it's
not even worth it.
So you're better off. You could buy into any bank. Well, I wouldn't say any bank stock, but your Bank of America, your JP Morgans, your Citi, they tend to do pretty well.
Yeah. I know savings accounts, like, yo, if you just have like an emergency fund, you want to just tuck something away in case you need it real quick, like, cool, but nothing more than that, man. Don't make the bank.
That's the correct term, emergency fund. Yeah, have an emergency fund.
That's it. Nothing more than that, because after that, you just making the bank rich, man. It's not even worth it. You could be doing that yourself. Just doing yourself a disservice.
Absolutely. So once more, we established the budgeting. We discussed all our different budgeting practices, forms of investment, how you can use your disposable income to increase your wealth. And just to cap it off, we'll touch base on this again further with our future topics. But just to cap it off, I just wanted to discuss how there's no one size fits all when it comes to investing. But once you've done your ample research, and you believe in whatever you're investing in, no, you shouldn't question yourself, because if you've done your due diligence and you've searched the company and you know the company as reputable, the only thing you can do is work on their track record. You can't time the market. You can't predict things. What's going to happen. So if you're budgeting and you're taking care of your priorities and your expenses, and you have the money available, keyword, you have the money available, then from there, there's nothing to fight about. Why not indulge and get into that and increase your wealth and save, invest and save high yield savings accounts, and from then just let your money turn and work for you. So once again, I appreciate the feedback from you, Steven. I appreciate the feedback from you, Josh. It's great to know that people need to understand that budgeting is not difficult. Now, handling your expenses in a world where things are the way they are, it can be difficult, but budgeting isn't. All you have to do is spread out all of your expenses, spread out what the money that's coming in, and make a decision of whether or not you're going to use what money that you do have available, because I know everyone's situation is difficult. And from there, work on how that little money that you have available, even if it's a small sum, is being put into something that's going to build for you in the future. So again, I appreciate it. Is anything else you guys like to share to close it out?
It's all mindset at the end of the day, man. Every spare dollar that you have, put it to work. You know, the same way you report to work every day, that's what your money needs to be doing for you. Except it's working 24/7. You know, it's not working 9 to 5 or anything like that. It's working 24/7, and it doesn't get tired. So invest every spare dollar that you have and build that future that you always wanted for yourself, your last name, your family, and then the community moving forward.
Right. All right. So once again, that concludes this episode of Money Talk, where we discuss all things finance, investing, and entrepreneurship. And I appreciate you guys coming forth on this platform to share your thoughts and your perspectives on how to handle income. So once again, Raising the Financial Bar with Mar, Driven for Greatness. We have my cousin Josh here on the end, and peace, love.
Love you guys. Appreciate everything. Yo, bro, keep doing what you're doing, man.
All right, Steven.
All right, y'all.
Our own mind has to be changed. We have to change our mind about ourselves.
Instead of me fulfilling my prophecy, I have to start. Instead of me, doing a good job and carrying on the empire, I have to build. And that's a hell of a job for 21-year-old. You know what I'm saying? That's a hell of a job for any youngster, male or female, to have to build the empire. Because this world is such a gimme. everybody back off. You know, everybody's like taught that from school.
I don't come to bow, you know. I come to conquer.